In December 2021, Tanla Platforms had a rich valuation at over 20,000 crores. Why did the company fail to sustain its rich valuation? Tanla Platforms, a globally known CPaaS specialist with a strong synergy between its major business verticals. Who is who of global business on the client list of Tanla? Leadership in domestic market far ahead of peers. Consistent and sizable promoter holding over 40%, ably supported by FPI and a major chunk with the retail segment, almost near absence of mutual funds and DIIs is equally worrisome. Quite a significant growth in cash from operations, strong investment in fixed assets and investments in integration of subsidiaries, particularly in FY24, sizable buyback for 3 years up to FY23. Tanla carries huge cash on the balance sheet for business growth, including acquisitions for inorganic growth initiatives. Over a period of 6 years, impressive growth in non-current assets and current assets, a 5-year CAGR of around 22% in respect of total gross assets, which is equally matched by growth in equity, which funds about 2/3 of the total gross assets, a debt-free balance sheet, and a rewarding return on capital employed, reflects the quality of financial strength. A look at the valuation enjoyed by the company. Very impressive performance in FY21 and FY22, which got the company premium valuation of over rupees 20,000 crores with an exceptional high price earning multiple. But the subsequent years up to the end of October 2024, the situation changed for worse, where PE multiple fell by over 50% and valuation went below 10,000 crore levels. Sadly, the company failed to sustain the rich valuation of FY22. A look at the quarterly price profit relationship. December 2021 took it to the peak of valuation, price over 2000. The subsequent fall took it to the lifetime low of rupees 493 in March 2023. While last 6 quarters have raised the level of profits, they have fallen far short of market expectation, and the price has continuously dipped for the last 3 quarters. In October 2024, there was the lowest of the price and the PE during the last 6 quarters. Inability to scale and surpass profits of December 21 all through the subsequent 11 quarters has impacted the market perception on the growth prospects of Tanla, particularly after March 2022. Quarterly sales growth has been quite disappointing, moving into negative territory quarter after quarter successively for 3 quarters in a row. Adding to the problem is stagnation of revenue at around 1,000 crores in the latest 4 quarters. This has hurt the company further, and more concerning is the negative year-on-year growth in the latest quarter of September 2024. Company's net profit after tax initial quarters up until December 2021 was on the rise. In December 2021, quarterly profit of 158 crores and a NPAT percentage of 17.9. Unfortunately, in all subsequent quarters, NPAT percentage has continuously fallen. And in the recent quarter, it has reached a low of 13%. Major challenge to Tanla is margin restoration as priority one. Comparing the NPAT levels of December 21 at the peak of 17.9%, observing an increase in material cost to the extent of 3.3% and equally damaged by increase in indirect expenses, the NPAT margin subject to compensatory effect reaches in the quarter of September 2024 a level of 13%. Tanla has a challenge to save on the NPAT percentage, redressing challenges in both material cost and expenses. Over last 12 months, the share price has been moving in a descending channel, price rushing towards lower band of the channel, which carries a further discount of about 15% to the current level. Worth noting is the April 23 price of around 500 rupees, another matter of concern. Interestingly, the current market price of 729 is at the rock bottom level below long, medium and short-term averages, making it all the more challenging as the reversal will be more time consuming given the depth the price has reached. From the perspective of Fibonacci retracement, the current positioning of the share price is quite precarious, being in the bearish zone of 23.6% and closely bordering the 52-week low. A bit of consolation is available in the price action data. The trading quantity is having a volume intensity far below the 100-day average for most of the period, while the share price has been moving far below the average line. It's quite interesting that the price moving below doesn't have the support of a rising quantity. As both price and quantity are falling together, trend reversal might be closer than expected. Technical superiority, market leadership and very effective operations, having strong generations, financially a very strong balance sheet, debt free and fundamentally very positive. Concerns are in terms of rising costs and expenses affecting the margin and profits, endangering the very feeble valuation. Hope you found this presentation on Tanla Platforms to your liking. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.